Everybody, what's up? We are back with another stock analysis, and I've been doing a lot of kind of unknown smaller companies over the past couple days, and we are stopping that today and looking at Palantir. Now, Palantir has been a huge growth stock over the past couple months. They've had a ton of attention. They've been trending on Stock Twitch just about every single day, or at the very least a couple times a week, every week. So we're going to get into them, look over the financials, give them a valuation, go over some earnings reports, and some other stuff too. So if you're interested, make sure to subscribe and let's get into Palantir. So Palantir is a software company. They have a commercial and government segment, and they develop operating systems for their customers. An industry metric to see here is new orders value. So you can see that did slightly increase throughout 2024. Actually, this is 2025 estimates now that I'm looking at. So it's actually expecting to basically stay the same in 2025 as far as I can tell. They are expecting, however, a massive increase from fiscal year 2024 to fiscal year 2025 with, I'm assuming, over $1 billion or possibly 2.8 million each to 3.8 million each. That's what I'm assuming is going on there. But anyway, market cap is at 236 billion, which honestly I had no clue about. I thought this was a much smaller company, but that is pretty big. Long-term growth rate at 31% is massive. Target price at 86 is pretty good as well. We're at 101 right now, but if we go over to the Palantir chart here quickly, we can see that they were just below that target price and just in the past day or two jumped up massively off of a very, very good earnings report. And also one thing to really visualize on the weekly time frame here is just how quickly this stock has gone up. So this has been a trending stock for years now. They had so much attention and had honestly fairly slow moves upwards. They were flat for most of 2022 or even decreasing. 2023 saw them have a pretty okay year where they did increase, but not nearly as much as they are now. And 2024 was just massive for Palantir. And now going to 2025, they are seeing another explosion in the value of their stock price. So like I was saying, I did not realize they were a $236 billion company, but it definitely makes sense now looking at how much they have grown. So you can see on the mini chart here just how much they're outpacing the market recently. I would expect this kind of sentiment to kind of die down a little bit as they've essentially 10x their value in less than 2 years. So I don't know how much more value they can really add in the short term. I think long term, it would definitely be an excellent play. It does seem like they have potential to be one of the next huge tech companies, which honestly they already are, but they definitely have a lot more potential on top of that. The estimates that we have available are all fairly few and far between, but they are positive. 5-year sales CAGR is at 30%, which is really high. So overall, that is fairly positive. And now let's get into their financials and see what we're dealing with. So this is not what I want to look at. I want to look at fiscal quarters because they have only really been going very well for about the past 2 years or so. So we're only going to look at that. Their sales in the past quarter, which is a preliminary report, so it's not fully finalized, beat their previous sales by 100 million. They've seen massive growth over the past just about 3 quarters, increasing by looks like 50 million and then another 100 million just in the past 2 quarters. So that is massive. If we look at their operating income, though, apparently they're supposed to take a huge hit in 2024, which again is preliminary. Same thing with net income, where it looks like it is much, much lower, but you have to realize this is preliminary results. So could be different, might not be different, but most likely will be. And so their net income was cut in half over the past quarter, which is not great. However, if we just look at how much their income has grown, it is still on the higher end. And if we do zoom out to the year-to-year view, we will see that it is much, much higher, actually more than doubled from 2023. And also their operating income did as well. So quarter to quarter isn't actually as important as I originally decided to say for myself, but over the year-over-year view, their increases have been very, very large, which is awesome. And one other thing, let's go back to the quarters for this one. Looking at their total shares, they are diluting fairly significantly too. 2 years ago, they had what I'm assuming is 2 billion 2 billion shares, and now they're at 2.3 billion. So that is a fairly significant increase. That's 10%, over 10% dilution in just about 2 years. So this company is definitely helping to bankroll itself by selling its own stock, which generally is okay, especially when you're getting results like they have been. So it's not too bad, but overall, we don't really want to see those kind of drastic dilutions, such as 10% over the course of 2 years. That's a little on the higher, actually very much on the higher end. Now looking into their balance sheet, we could see they've had massive amounts of asset growth over the past 2 years, basically doubling their assets since 2022, which is awesome. They have a very healthy cash position with almost no debt. They're at just about under 250 million in total debt, while they have well over 5 billion in total cash. So that is a great position to be in for them. And speaking of their cash, let's move into their cash flows now. So their operating cash flows have been consistently positive for the past 2 years. We could see, despite that net income being lower, their operating cash flows are actually massive compared to where they used to be even just a few quarters ago. Their investing cash flows are also usually consistently negative, but it looks like they sold off a lot of investments in the past quarter, which is perfectly fine. Very little in terms of capital expenditures, which is kind of impressive. Usually we see this being a much larger number. So the fact that they are only doing 3 million per quarter in CapEx while they're doing hundreds of millions in sales is pretty impressive, honestly. And looking now at their financing, we could see that stock dilution I was talking about. They are selling shares basically every quarter other than one here. And other than that, free cash flow is positive and actually at the highest it's ever been in the past quarter. So definitely looking like that is going to add a lot of value as well. And finally, let's look into their ratios. Hopefully we get something good here. Sometimes it doesn't want to show it, and looks like we do. So gross margin is well above the 5-year average, 3% over. Operating margin just went positive, so we are well above the average there. Same thing with net margin. Their returns are also looking very positive. Again, unfortunately, the best time to buy this stock would have been about 2 years ago. So hindsight is always 2020, but there's always, as we've seen with companies like NVIDIA that have had similar growth to this, there's always much more room to grow. So this is just the very beginning of their stock chart. So there's a lot more room for this company to move up, move down. We'll have to see. So total debt to equity ratio is under 5%, which is incredibly healthy. That is a perfect amount to have, honestly. They could be utilizing debt more and getting into more debt in order to grow their company faster, but it seems like they really don't need to, just with how much growth they've seen. So overall, that is perfectly fine. Now let's see if we could find a recent earnings report. Hopefully, I don't think they will have Q4, unfortunately. And they actually do. They have fiscal year 2024, and we have the metrics recap and the street takeaways, which doesn't happen very often. So let's go into this first. So gross margin beat estimates by about 1%. Operating margin came in way higher, almost 6% higher. CFO cash flows, possibly 460 million, which is perfectly fine. Free cash flows came in almost 200 million over estimates, which is awesome. So you can really see why this company rose so much on this earnings report. I mean, it absolutely makes sense. They're massively beating their estimates. Deferred revenue beat estimates as well. Billings came in 100 million over. 129 deals of at least $1 million, 58, 5 million, 32, 10 million. Record-setting 800 million of total contract value, up 134% year over year and 170% quarter over quarter, which those numbers are just unbelievable. And U.S. commercial remaining deal value is up 100% basically and 47% quarter over quarter. So those numbers are excellent. Let's get into the street takeaways now and see what analysts are saying about it. So I'm assuming, and yes, we are getting that here, every single target is raised. 120 raised to 80, target raised to 40 here, which is definitely on the lower end, just considering the stock price is currently at 101. And the other analyst ratings are much higher and also maintains an outperform. So let's go over just the overview here. I'm not going to read too much into everything, but analysts lean constructive following the blowout results driven by significant government acceleration, with several acknowledging the company's strong execution, positioning, and transformational AI potential. So they are getting into AI as well, which is awesome. Most remain concerned about the premium valuation, which honestly, I do understand considering how much the stock price has gone up recently. And we will get into a valuation against their competitors right now and kind of see where they are compared to their competitors. So there should be a fairly good mix of companies here, which there are. So this is the PE of the current year right here. And you can see their PE ratio is insane, which to be fair, their competitors also have fairly high PE ratios, but theirs is just on another level. So let's look it up here and get the current. So currently, apparently their PE ratio is 533, which is insane. I don't know. I mean, it has to be that because the math is the math. But anyway, for this year, their average is 73.39 and the median is 48. So let's put those in as well. And the median is 48. So that gives an average PE ratio of right around $60 a share and no ad block. No, thank you. Let's get back into here. So gives an average PE of 60.6 compared to their PE of 533. Now, to be fair, their competitors are Adobe, Salesforce, Intuit, companies like that. So let's look at named competitors now and see if there's anything different here. Again, no matter what, their PE ratio is incredibly high. So either way, it's not going to look very different. And you can see the averages here are actually a little bit lower. So overall, they are incredibly overvalued compared to competitors, which does make sense considering how much they have grown recently. The current downside is negative 88%. The valuation comes in at $11.50. So it's really a matter of can they back up this valuation, which currently it sets them just about back at where they were in 2023 at $11.50. So will they crash down that far? Probably not, just because of their potential. And there is just a lot of consumer confidence in the company, obviously, because they added basically $200 billion in market cap in about a year and a half. So overall, do your own research here. Let me know what you think in the comments. Let me know what other companies you want me to review. And that's all I got for Palantir. So make sure to subscribe. And thanks for watching. See you in the next one.